Today's myth is homeowners thinking it's a good idea to drop their insurance since the mortgage is paid off. Let me say this. Don't do that. Don't do it. I'm sure when you drop your insurance, you thought that was a great idea. And you probably said, now I can save even more money like I'm saving since I don't have mortgage payments anymore. Yay! That's not a good idea. And let me tell you why. Remember when you had a mortgage, the lender required a certain amount of insurance to be carried by you, the homeowner. And back in the day, when taxes and insurance were not included in the mortgage payment, and you paid it separately yourself outside the mortgage. And lo and behold, if you didn't pay it and there were not coverage on that house, the lender had to pay it for you because you let the insurance lapse. Then the price would be double, sometimes triple, with them footing the bill because they had to pay it for you. They had to cover it for you all. That was y'all asset, meaning yours and theirs at the time, because you hadn't paid the mortgage off, but you was working toward getting it paid off. Now, if you're still making monthly payments, it may be aggravating to you to be required to spend money on insurance. Mortgage companies don't do it just to be irritating, and I know they can be irritating. They require insurance because a home is a terribly expensive thing to replace. It is extremely costly. In other words, it could possibly cost $100,000 or more, depending upon the value and replacement cost of putting your home back together. And that example could be a home that you purchased for $75,000. But I have a question for you. Do you have that kind of cash in the bank? Do you have it laying around? Maybe you got some mattress money. If you do, you don't want to spend it like that when insurance could cover it. Now, far too many homeowners, when they finally manage to pay off their mortgage and own their home free and clear, if a tragedy hits and they suffer a loss due to fire or natural disaster, that loss is compounded when your insurance has been dropped because you were no longer required to have it. The lender didn't require you to have it. You didn't even require yourself to have it. Now, unfortunately, most drop it, especially our seniors on fixed income, because they may not be able to afford it. But believe me, you want to protect your biggest asset. That's generational wealth that you have or that you're building. And you don't want all those payments, that money you spent over the years paying for the house, to go to waste. Now let's try and think past today and think about you and your family's future. It's just like paying property taxes. Yes, your home is paid off, but you must pay them or they take your home in a tax sale. Insurance is in case stuff happens, and heaven forbid that it will. In other words, it's better safe than sorry to have insurance. Now, I know insurance payments may feel like money going out the door, especially when you think you don't need it. If tragedy strikes, well, then it's too late. Of course, just because you should carry insurance is no reason not to search for ways to reduce its cost. Now, I have a good insurance agent with attainable prices so that you can protect your home and be able to pass that asset on to your loved ones. But of course, you're enjoying it yourself now. I'm just thinking about the future. But here's the thing. I'm not trying to be doom and gloom. I just want you prepared. I want you to secure your biggest asset. So if you have let your insurance lapse, Go find some insurance to cover your home, which is security and equity. In other words, there's money in your house. Now, there are programs out there that help with just about anything you can think of, especially for our seniors in Memphis. So go research and make it happen now. Until the next Mythbuster episode, peace.